Good evening. Thank you for coming to our financial aid evening. Tonight we have a wonderful guest here speaking. We have Mr. Jim Anderson, who is the Director of Financial Aid at Montclair State University. And he has done this presentation for us for a few years now, and he is a wealth of knowledge. So everyone please, thank you, Jim, for joining us.
Good evening. So I've been in Montclair for 15 years, but I've been doing financial aid stuff for 45 years. Anxiously looking forward to retirement. But I worked at 5 universities over those years, and the other 4 were private schools. So what I try to do at these programs is give you a full flavor of financial aid, and there are some differences between the privates and the publics and the highly selectives and everybody else. So I'm going to try to cover that and just give you, like I said, a full flavor of financial aid. Just so you know, I believe the presentation is going to be posted to the high school website. Alexis?
Yes.
Yes. So you don't need some links in here. You don't have to worry about taking photographs or trying to jot them down. At the very end of the presentation, I provide my email address, and when I do these programs, I'm more than happy to let people, they don't have to be looking at Montclair. I mean, if you have a financial aid question at a later date, you can send me an email, and I'll try to get back to you with an answer. I'm here tonight, actually, on behalf of the agency to the right of the slide there, HESA, which is the Higher Education Student Assistance Authority. That's the New Jersey state agency that manages all the financial aid programs for the state. So what happens is high schools reach out to HESA and they request a speaker for an event like this, and they send someone like me. So that's how I came to be here. And that is their mission, which is basically to provide funding for New Jersey students to go to college. This is new this year. You may or may not be aware of it, but since you're here, I don't think it's going to be an issue for any of you, but there is now the state passed a law that requires students, high school students, to complete the federal aid application, which is called the FAFSA, as a graduation requirement. So this is brand new. There is a waiver process, so if someone doesn't really want to do it, they don't have to, but this is something new. All right, and the financial aid offices at colleges, really our job is to find whatever resources we can for the student from every source possible. So we try to make it affordable. That's our primary objective. So what are we going to discuss tonight? What is financial aid? How is eligibility determined? What is the student aid index? This current academic year, 24-25, is the worst year for financial aid in my career. The federal government completely botched the process of putting out the federal aid application, which is called the FAFSA. They're hopefully going to clean it up, but they made a lot of changes. This was from a bill that was passed in Congress, a lot of changes, one of which was the index that's now used for financial aid purposes is called the student aid index. Prior to that, forever, it was called the expected family contribution. So if some of you went to college yourself a while back and applied for financial aid or have older children, you may be more familiar with EFC, but EFC is out and SAI is in. We're going to talk about types and sources of financial aid packaging, which refers to how colleges bundle together multiple sources of financial assistance into a financial aid offer to the student, how to compare offers from different schools, special circumstances. So when we get into the form a little bit, you're going to see that for those of you who are parents of seniors or students who are seniors, the first application you're going to file is for the 25-26 academic year. And that will be looking at income from 2023. So special circumstances refers to situations where there's been a change in the family's financial circumstances. So most common situation is where a parent becomes unemployed, as an example, or you could have an illness, or you could have out-of-pocket medical expenses. Anything that really impacts the family's ability to pay for college may be relevant. So how it works is that if something like that should happen, the student goes to the financial aid office at the college they're attending, and they tell them, hey, my dad's unemployed, can you do something for us? Now, we're allowed by regulations to recalculate the student's eligibility based on special circumstances. We call it professional judgment. Every school does things a little bit differently, but keep in mind that if something should happen, that you can always do that. And that's all the way through the first year in college. So it could happen in the spring of 26. In March of 26, if one of the parents loses a job, they can go to the financial aid office and the school can recalculate eligibility retroactive to September. So at a school, at Montclair, our policy is that if there's an unemployment situation, we basically zero out that parent's income from the original FAFSA. So it does sometimes have a significant impact. Consumer issues, you should see yourselves as consumers because paying for college for most families is probably the second largest expense they're going to incur short of their mortgage. So it's an important investment. And we're going to talk about the 2 financial aid forms that are filed, the FAFSA, which all of you will file, and the profile form, which maybe some of you will file, and I'll explain that. All right, so what is financial aid? It's a generic term. It really refers to any financial assistance a student is offered from any source other than their families. It does include loans. I always get sometimes students are only offered a loan. Is that any financial aid? But yes, you did. You got a loan. A loan was offered to you. That's financial aid. What forms are required? So the free application for federal student aid, the FAFSA form. This is a federal aid application. This is the one that the feds botched this year. And this is the student's application. The whole financial aid application process is the student's application, not the parents'. So the form is the student's form, but the parents will contribute information to the form. The FAFSA is used at every college in the country to determine eligibility for federal student aid. It's also used by the state of New Jersey. So if you are a New Jersey resident, then when you file the FAFSA, the information from that FAFSA automatically goes to that state agency, HESA, that I mentioned at the very beginning, and they will calculate the student's eligibility for state aid. And the vast majority of schools use the FAFSA exclusively to award their own institutional financial aid. The second form you see there is the College Board Profile Form. So this is a form that's used only by certain schools, and the certain schools would be typically very highly selective, expensive private colleges. They're the ones who ask the students to complete the profile form. The reason they do that is because those schools tend to, a lot of those schools meet full need, meaning that they, whatever the student's demonstrated need is, they meet it in full with institutional money and money from the government. And so because there's a lot of institutional money involved, they want to do a deep dive into the family's finances. So if you are looking at schools like that, you have to find out if they require the FAFSA. And just go to their website and check it out. If you are going to be filing the FAFSA, the profile form, you're going to file that in addition to the FAFSA. You file both forms. Verification. So in a normal year, and this is not a normal year, but in a normal year, the federal government will select a certain percentage of students for verification. So what happens then is the student is required to submit documentation to the financial aid office at the school they're attending, and it's our job to verify that the information that they put on the FAFSA was correct. And it used to be around 30% of applicants. This year, because of all the problems with the FAFSA, they've almost suspended it completely. So when I do these programs, I tell people, if you're going to cheat, this was the year to do it, because nobody's checking anything this year. But I assume we'll be back to normal next year. So if the federal government selects a student for verification, they're going to hear from the college, and they're going to be asked to submit documents. And while I'm thinking about that, I'm glad there's some students in the room too. Students have to read emails. They have to read emails year-round. Summertime, Christmas time, doesn't matter, because that's how the school is going to communicate with them, and that's how the state agency, HESA, will communicate with them. So if they don't read their emails, they could miss some very important information. So keep that in the back of your mind and pass that along. So when you file the FAFSA, I'm going to get into this a little bit later when I talk about who is a parent. If the parents are separated or divorced, only one of the parents is going to fill out the form with the student. The other parent will not. So the schools that use the profile form oftentimes will go after the other parent. They used to call it a non-custodial parent, but now it may or may not be the custodial parent. It's really the other parent that's not providing information on the FAFSA. So the key thing, again, is to know your school's requirements and know what their deadlines are. Deadlines in financial aid are really important, so you don't want to ever miss a deadline. All right, so back to the Student Aid Index. And again, this is a brand new thing for the current academic year. The SAI is, when you file the FAFSA, it goes to the federal government, U.S. Department of Education, and they're going to calculate the SAI. They look at the parents' income and assets, they look at the students' income and assets, and that's how they come up with this index. And again, the index is used to determine eligibility for federal financial aid at every school in the country, same process. The schools that use that profile form, they still call their index the expected family contribution. And at the very bottom, you'll see the College Board has a website which is I found very valuable when I was looking for schools for my own kids. There's a lot of good information out there, one of which is this calculator. So you can go in there right now if you want to, just to play around and plug in your numbers, and it'll give you an estimated student aid index. It'll also give you an estimated EFC that would be used at one of those elite schools if you're looking at those types of schools. But it would give you some idea what your index is going to be, because that'll impact your eligibility for need-based aid. All right, at the beginning of every financial aid award cycle, the school has to establish a cost of attendance. So the cost of attendance is intended to represent the full cost for going to college for that year at that school for that student. So they start out with what are called direct costs, meaning things that you pay directly to the college, tuition fees always, and if you live on campus, room and board. And then there are indirect costs for things like books and supplies, personal expenses, and travel expenses. Those are real expenses. My son went to college in Ohio years ago. My son went to school in Ohio years ago. Every time he flew home was $500, and that was an expense that you had planned for, even though you weren't paying the college for that. Adjustments can be made to the cost of attendance for students in particular circumstances, and the student can go to the financial aid office and ask for a reevaluation of the cost of attendance. Doesn't necessarily mean they're going to get more money, but it could affect the amount of money they can borrow. The calculations that are used for the student aid index are quite different from that EFC that those private schools use. The other thing to mention with cost of attendance is obviously the cost of attendance varies widely from one institution to another. You know, at the one end, at the low end of the spectrum, you have the community colleges. They're going to have a very low cost of attendance. Then you have the public four-year colleges, and then you have the private colleges, and there's quite a range there. The most expensive ones now having a cost of attendance probably around $80,000 a year. So the cost of attendance will vary from school to school. The SAI will not. The SAI will be the same at every school. So a student's demonstrated need is very simply the cost of attendance less the student aid index. This slide just has a little more information about the cost of attendance, how it's put together, and those are the individual adjustments that may be made, examples, and so like when the student does study abroad, the cost of attendance will be changed to reflect the costs associated with doing that. And then those other things could also result in a change to the cost of attendance. All right, so the sources of financial aid, the colleges and universities themselves, the federal government, the state of New Jersey, and then private organizations. And financial aid comes in the form of grants, scholarships, loans, and employment, student employment on campus. The column over to the right there, those are things that colleges may take into account in determining how much of their own money they're going to give to the student. So obviously academics is very important. The better the student is, the better the chances of getting institutional money. Athletic ability only comes into play if the student gets an athletic scholarship, and that's only available at NCAA Division I and Division II schools. The vast majority of those colleges in the country are Division III. No athletic scholarships and no preferential aid from the financial aid office because they're an athlete. SAT or ACT scores, there are still schools out there that emphasize how high a student's score is, so that could be a factor. Geographic diversity, I mentioned that my son went to school in Ohio years ago. He went to a public university that has fewer than 10% of their students from out of state. So they try to, most schools try to bring in people from far away so they have some geographic diversity. So I think it benefited my son in terms of, I know it did, in terms of the aid that he got. The types of courses you take, AP and honors courses, obviously is going to help. Legacy, which is interesting, just yesterday, the state of California passed a law barring legacy admissions for all schools, including private schools. And just so you know what that is, this is where the children of the parents of the child applying for college went to that college. And so this has been a big factor with the more elite schools because a lot of them admit a lot of students who are children of their alumni who may not have otherwise gotten in. And they do that because they want those parents to give them money as alumni. So anyway, there's a movement away from that. A lot of schools have individually moved away from it, and now you have a whole state that's done it. So I think it's kind of on its way out. The students' activities in school, talents they might be able to exhibit, gender and ethnicity. My daughter went to a college years ago that was 2/3 male, and I think that helped her in terms of getting financial aid at that school, because most schools like to have gender equity. And the high school you attend, your kids go to a good high school, that certainly will make a big difference. Class rank, I don't know how much that plays into it, because most schools don't disclose class rank any longer. But so anyway, these are some of the things that could influence what the school decides to give the student from their own resources. All right, so grants. Grants are a form of what's called gift aid, free money. It does not have to be repaid. The word grant usually suggests that there's a need. Need is a factor in the qualification for the funds. Scholarships are another form of gift aid. It's free money, and scholarships are usually awarded on the basis of merit, some kind of merit, academic, artistic, athletic. Loans are loans. So you'll see on subsequent slides, there are loans for students. There are loans that will involve the parents. There are federal loans and there are private loans. The federal loans tend to have fixed rates, which I'll go over. The privately financed loans, like student loan companies, will offer a variety of terms. Hold it right at the bottom. Anyway, so the privately financed loans, like from student loan companies, the term.
The lights blinking.
Copy that. Oh, a little better. All right, I'll talk loud. Can you hear me? All right, I'll do my best. All right, so the private lenders will offer variant terms depending on the credit score of the, because typically it's a student, it's a borrower, and there's a co-signer, which is usually the parent. And it will, so that the terms that they offer will be based on that parent's credit history. It'll also be based on the type of repayment options they choose. They choose to make interest and principal repayments immediately. They might have one rate. If they choose to pay interest only, they might have another rate. If they choose to defer altogether until the kids finish with school, there might be a different rate. Needless to say, you should borrow wisely. You shouldn't borrow unless you have to. And I oftentimes get a question about, is it worthwhile for a student to borrow? And my opinion on that is that both of my kids took loans, is that statistically, a person who earns a bachelor's degree will, over their lifetime, earn more than $1 million more than the average person who doesn't have a college degree. So from that perspective, I think it's a good investment. All right, student employment is a job on campus. Like any other job, the student puts in the hours, they submit a timesheet, they get paid. So when you get your financial aid offers from the colleges, it may include all of these sources of aid: grants, scholarships, loans, student employment. The grants and the scholarships and the loans will get applied to the bill. Student employment will not, because the student has to earn the money as they go. All right, so grants. First, we're talking about the federal government. The largest grant program in the country is called the Federal Pell Grant, and the maximum award this year is $73.95. That's for a student who is showing the highest amount of need. If a student is eligible for a Pell Grant, whatever the amount is they're offered is the same at every school. It doesn't vary by school. SEOG is another federal program. It's fairly limited. The feds give the schools an allocation of funds, and we award them to high-need students. And then TEACH is a grant program but there's a catch. It's for students who are going to become teachers. And the deal is they get the grant, but if they don't become a teacher, it gets converted to a loan. So there's an element of risk involved with that. That's why at my institution we do very little with the teacher program. And finally, federal work study, which is basically federal funds to help to enable a student to work on campus. Okay, here we go. All right, so if you file the FAFSA, at a minimum, the student's going to be offered a federal direct, also known as Stafford loan, federal direct loan, whether they demonstrate need or not. So in the middle column there, you see the amounts that can be borrowed. So at the freshman level, the student can borrow $5,500, at the sophomore level, $65,000, junior and senior level, $75,000, and the cumulative limit for an undergraduate student is $31,000. You see some numbers in parentheses below those numbers, and that refers to a subsidized loan. So basically, if the student demonstrates need, a portion of their direct loan will be subsidized, meaning the government pays the interest while they're in school and for a grace period after they finish school, so they don't start getting charged interest until they go into repayment. So if it's a needy student and they're a freshman, they'll be offered $5,500 total. $3,500 will be subsidized, $2,000 will be unsubsidized, meaning that there is no interest subsidy. The student does not have to make payments while they're enrolled in school, as long as they're at least a half-time student. The column over to the right is for independent undergraduate students. So when a student starts to fill out a FAFSA, they're going to start in the student section. They're going to answer a series of questions. Series of questions that will determine if they're a dependent student, meaning dependent on their parents, or independent. So just so you know, most 18 to 21-year-old students are dependent. So the most common circumstances under which a student would be independent would be if they're over the age of 23, if they themselves are married, if they have a dependent that they are supporting, or if they're a veteran of the armed forces. Under those circumstances, they're automatically independent. And then there are other circumstances where a traditional age student would be independent, such as students who are in foster care or in a guardianship situation, things like that. But anyway, independent students, as you can see, hopefully, they can borrow more money. The interest rate on this loan is fixed, and it's established every year. So for the 25-26 academic year, the interest rates will come out in July of 25. It's based on some index. The rate you see now for the current year is 6.53%. That's about as high as it's been for a very long time, because when interest rates in general go up, this rate goes up. So hopefully, because interest rates are going down now, that the rate for your kids next fall will be lower. They are still charging a little over 1% origination fee, which they subtract from the proceeds. They've been talking forever about getting rid of that. I hope they do, but it's still there now. All right, this slide lists all the programs that are offered by the state of New Jersey, and I have a slide on each one of these programs, so don't worry about it if you can't read it. So let me say right up front, this is really important, all of these state grant programs are available to students only if they go to college in New Jersey. If they choose to go out of state, they cannot take the state money with them. Okay? So how do students apply for state aid? I mentioned earlier that if you're a New Jersey resident, your FAFSA information is going to go to the state automatically. Or if the student is a New Jersey Dreamer, which I'll explain later, they would file a different application put out by the state as opposed to filing a FAFSA. For state aid purposes, the student must be a U.S. citizen, an eligible non-citizen. Eligible non-citizen most typically would be someone who has permanent residency in the United States, so-called green card. There are some other statuses that qualify. And in New Jersey, if the student qualifies as a New Jersey Dreamer, they can qualify for state aid. The student has to be a New Jersey resident. The parents have to be New Jersey residents. They have to be planning, as I mentioned earlier, to attend a New Jersey school. And for most of these programs, they have to be full-time. And it's a need. Most of the programs are need-based. So the state, when the state gets your FAFSA information, they're going to calculate their own index, which is called the New Jersey Eligibility Index, NJEI. And that index drives their students' eligibility in the tuition aid grant program, which is the next slide. And that index and where they choose to go to school is what drives the amount they're eligible for. And the state does have deadlines, so I'll mention this right now. If your kid goes to a New Jersey school next fall and they get state aid, TAG, the deadline to file the FAFSA for their sophomore year will be April 15, 2026. So you don't want to miss that deadline because it's a hard deadline. If you miss it, then you're not eligible for TAG the following fall. So my suggestion to you when the time comes is you mark your calendar for next December when everybody's home for the holidays, get the form filed, and so you don't forget to do it. All right, the Tuition Aid Grant Program, or TAG, is a tremendously generous program. I mean, New Jersey, honestly, is among the top maybe 2 or 3 schools, states rather, in the country in terms of the total support they provide for students going to college. The maximum TAG award this year for a student going to a New Jersey private college is $14,000. The maximum grant at Montclair State, where I am, $10,964. Our tuition fees is a little under $16,000. So at Montclair, the TAG award covers the majority of our costs for tuition fees. Those are maximums. So that's for students who demonstrate the highest amount of need. They're just like the Pell Grant. There's some students get lesser amounts. There's a scale that goes down to 0 eventually. But it's a really generous program. You must be full-time for this. You have to be attending a 4-year institution. There is also a part-time TAG program, which is available at the county colleges. I'm sorry. Yeah, you can go full-time at the county colleges too, but they also have a part-time program, which is not available at the 4-year school. So if you're going to county college or community college, you can get a part-time TAG if you're taking between 6 and 11 credits per semester. EOF, Educational Opportunity Fund. This is another state program. This one is for students who are disadvantaged economically and educationally. There is some additional grant money from the state, but really the biggest benefit to the students is that there's a dedicated staff of EOF counselors on every campus in the state who work exclusively with those students and help them get through to their degree. You folks do not qualify for this because of where you live. It's mostly the larger cities that qualify, poorer cities that qualify for this program. All right, NJ Stars. So if the student is in the top 15% of their class at the end of their junior year or their senior year, they qualify for NJ Stars. So the guidance department will inform students if they're eligible. They don't necessarily disclose what the class rank is, but they'll tell them you're eligible for NJ Stars if you want to take advantage of it. The deal is the student will go to a community college tuition free and go there and complete their associate's degree, and then they can transfer to a 4-year public or 4-year private college in New Jersey and get a $2,500 scholarship in each of the last 2 years as they finish their bachelor's degree. There are some GPA requirements, as you see in here, and there is a... I didn't do that. There is an income cutoff of $250,000 family income for Stars 2. All right, there's another program, Beaver Governor's Industry Vocation Scholarship for Women and Minority Students. This is for people who are planning to study in the construction-related fields, and it's income-based, and it's $2,000 a year. I Promised is a kind of a new description of multiple programs that now exist at the state level where students can attend college tuition free. The first one that falls under it is Community College Opportunity Grant. So this is a second way for a student to go to community college tuition free, Stars being the first one. And this one is based on income. So I mentioned earlier that if you're filing a FAFSA for 25-26, it's going to be looking at 2023 income. So this is for a dependent student, they're looking at the parent's income. So if the parent's adjusted gross income is between 0 and 65,000, the student can attend tuition free, and it goes up to 100,000 where there are some discounts. There's 3 tiers. The Garden State Guarantee Program piggybacks on that. So this is available at the 4-year public institutions. And so the student would finish their associate's degree, they transfer to a 4-year public institution, and they could qualify for free tuition at that institution as well, based on the tiers that you see here. So again, if the parents' income is between 0 and 65,000, they would qualify for free tuition. Both of these programs are what's called last dollar programs. So basically, this program fills in any gaps there might be for the student after all the other aid they're receiving from the Pell Grant or TAG or from the institution itself. There are some community colleges and four-year public schools in New Jersey, not all, but some, that participate in a 3+1 program. This is where the student would go to the community college for 3 years and then go to the four-year institution for only 1 year. So the advantage there is they pay less tuition at the community college for one additional year. But again, not every school does this, so if you're interested, you need to research. All right, loans. All right, so loans and financing. So payment plans. So most colleges offer a payment plan. Basically what that'll do is it'll allow you to spread out any out-of-pocket payments you're planning to make. So for example, at my institution, tuition and fees for the fall would be due in August, normally in full. If someone signs up for the 5-payment plan, they'll make their last payment in November. It's not a loan. There's no interest charge. There's a nominal fee. Most schools use an outside company to manage these payment plans, but it's a way, again, to spread out your payments that you're planning to make out of pocket. The direct loan program, I already talked about the students' Stafford Loan Program. There's also a federal loan program for parents called the PLUS Loan, Parent Loan for Undergraduate Students. The parents apply for this. It's their loan. The student has nothing to do with it. And they would be, they'd have to qualify on a credit basis. So unlike the federal Stafford loan that students get, there's no credit check at all involved with that. But for this program, there would be. The parents would have to qualify. The terms are not that great, in my opinion. The interest rate this year is fixed at a little over 9%, but they have a whopping 4.2% origination fee. So if you are going to be borrowing, you the parent, are going to be borrowing and you've got good credit, you're going to want to shop around. One thing about the PLUS loan, however, is that the parent applies for the PLUS loan and gets denied for credit reasons. The school is permitted to give the student additional unsubsidized federal direct loan money, $4,000 a year at the freshman and sophomore level, $5,000 at the junior and senior level. And then there are the other private lenders out there, alternative loans, student loan companies, banks who make student loans for students. Many schools, including mine, use a not-for-profit group called Elm Select. So if you go to Elm Select and you choose Montclair State, what you're going to see is all the lenders that our families have used over the last 3 years. We call it a historical list. And given the size of our institution, it pretty much includes all the major players. So if you're interested in seeing what's out there, you can go to Elm Select and you can see what's there and you can shop around, basically. And you should shop around. If you're going to be borrowing, you're going to want to get the best rate you possibly can. One thing that's common about the PLUS loan and the private loans that are offered by private lenders is that you can borrow up to the full cost of attendance, less any aid the student is getting. So if you're going to that $80,000 school and the kid gets offered the Stafford loan only, you theoretically could borrow the rest in one of these programs. Not that you want to, but you can. The state of New Jersey, HESA, has its own version of a private loan, and this is called NJ Class. It's actually a very good loan program. Those are fixed rates you see in the middle there. They always compare themselves to PLUS because they're a whole lot better than PLUS, but just about everybody's a whole lot better than PLUS. But it is a good program. Unlike all the grants that can only be used inside of New Jersey, if your kid is going out of state and you're interested in this loan program, as long as you're a New Jersey resident, you can apply for an NJ Class loan. So this loan is available regardless of where the student would go. So the applications to apply for aid, there's the one at the top, the green one is the FAFSA splash page. The one in the middle is the CSS profile that I talked about, and the one at the bottom is New Jersey Dreamers. Let me talk a little bit about what a New Jersey Dreamer is. An undocumented student who lives in New Jersey, their parents live in New Jersey. The student goes to a New Jersey high school for at least 3 years and graduates from a New Jersey high school. That qualifies them as a New Jersey Dreamer. And they are permitted to apply for state aid, and they would file that application at the bottom, which is called the alternative application. All right, so you're not going to wait to submit your financial aid forms you don't wait to get admitted to the colleges, you do it at the same time. So when you're submitting applications to the colleges, you should be filing the FAFSA as soon as you're able to do so, which this year will be December 1st. And if the kid doesn't get into some of the schools, no harm, no foul. I mean, the information doesn't go anywhere. Once the student is admitted to the college and the school has the FAFSA information on file, then they're going to put together a financial aid offer to the schools. It used to be called an award letter. They don't like that terminology anymore, so they call it an offer. And so how do the schools do that? Well, they start out with what I refer to as entitlement programs, the federal Pell Grant, the New Jersey Tuition Aid Grant. Those are programs where eligibility is determined by the state agency and the federal agency. Schools have no discretion in what the student receives. Second will be that federal Stafford loan that the student can get, and then those two federal aid programs that are fairly limited in funding that go to needy students. And finally, institutional aid. Institutional aid meaning money from the college. So if you're looking at private colleges, this very well may be the most important component of the financial aid offer that you get from the school. So you get all your financial aid offers, and you need to compare them. You need to look at them. You need to understand what's in them, and very importantly, how you get money in the future. So if the student's been offered a need-based grant from the school's own money, own resources, then you're going to want to know what their policies are for renewal. Is the amount going to vary? Is it going to go up or down if your need changes? So especially if you're anticipating for whatever reason that you're going to have lesser income in the future, like one of the parents is retiring, for example, you may want to know if the school is going to be offering additional money in the future. And on the flip side of that, if you think you're going to be doing better financially in the future, you might want to know if they're going to cut the amount that they're offering to you. As far as merit-based awards go, scholarships, usually the schools have a GPA requirement to retain the scholarship. A common one would be a 3.0, a B average. And that's important. So if your kid gets a sizable merit scholarship offer from the school, and that's kind of the basis of your decision to have them go there, you need to have a level of comfort that they're going to be able to do what they need to do academically to hold on to it. Because otherwise, if they don't get the GPA, they could lose it, and then you're stuck with a decision about pulling it out or pulling up more money. Excuse me. All right. Differential preferential aid package. So this is really more of a private school thing. Schools admit a range of students. At one end of the spectrum are the students that they really, really, really want to come. And at the other end of the spectrum are the students who just barely got in. So the schools are, so you can have two students getting admitted to the same school at either end of the spectrum who have identical need, and they could get two very different financial aid offers from that school. The one at the high end could get a whole lot more gift aid being offered and a lot less out of pocket than the other students. So that happens frequently. Most schools, you see the schools meeting full need, far and few between. What that's in reference to is that there are very few schools across the country that have the resources to meet the full need of every student who attends. They're the Princetons of the world, all right? So if you get into an elite school like that, great. If you have need, they're going to meet you full, and many of them do so without any loans. But that's the exception, not the rule. Most colleges do not have the resources to meet full need, so you sometimes will have what we refer to as a need gap. The cost of attendance, less the student aid index, less the aid the student's been offered, and then there's a remaining amount that you have to come up with, need gap, that you have to figure out how you're going to finance. So what is your bottom line? You need to do the math. You need to take every offer you have from the schools, determine what the direct costs are, tuition fees, room board for living on campus, subtract the grants and subtract the scholarships, subtract the student loan if the student is going to take it. What's left is your out-of-pocket. You have to drill down to that number to fairly compare the different schools. Working at a public institution over the years, I've had many parents of prospective students who would complain about what they might have gotten from Montclair State from our own funds, and they'll tout the fact that their kid has these wonderful scholarships from these other schools. So I would ask them, well, what are those other schools? And invariably they were private schools. And so they might have gotten a $10,000 scholarship at that private school, but that school costs more than $10,000 more than Montclair. So it's still cheaper to come to Montclair in that instance. So you have to do the same thing. If you want to really compare apples with apples, you have to do the math and drill down to that out-of-pocket. And difficult decisions. So let's say the kid applies to 6 schools. 2 of them are reach schools, 2 of them are in their groove, so to speak, and 2 of them are safety schools. They get into all 6. Where's the kid going to want to go? Well, they're going to want to go to the reach school, right? But the irony for you as a parent is that your out-of-pocket might be the least advantageous for that school compared to the other schools in the mix. So to that point, I encourage parents to be really involved with where their kids are applying to school. You should try to do your best to determine what your prospects are for financial aid, need-based and merit-based aid, and guide them in terms of where they look for schools, because you want to make sure that you end up with a financial situation that you can work with. Also, I've seen over the years that a lot of times the oldest child, first one to go to college, the parents are really not involved at all, and the kids, they apply where they want to apply. They're talking to their buddies in the hallway, where did you go, where did you apply? And they get into that dream school, and it's an expensive private college. And then, and only then, do the parents find out what it's going to cost them to send them there. And then they have a really difficult decision to make, because the kid wants to go there, and you don't want to say no. And I've seen over the years that the oldest child, a lot of times, will be allowed to do that. They'll go to that dream school. And then the parents struggle to pay for it. And then when younger children come along, they don't have so many options, because the parents can't afford to do that a second time. So I encourage you, if you've got multiple children, you want to be fair to all the children, view college as a family thing, and try to keep in mind what things are going to cost in the future for the others. If you'll indulge me, I'll tell you a couple of stories about my own kids, just to illustrate what you can do. My oldest was my daughter. She was a great student, great SAT scores, honors classes, AP classes, the rated GPA above a 4.0. She could have gone to a lot of different schools, but I did the math, and I knew that we weren't going to demonstrate need. So if you get into one of those schools, like I mentioned, the elite schools that meet full need, the flip side of that is that if you don't have need, they don't give you anything. There's no merit scholarships. You get into Princeton, and they think you can afford to pay the bill, you're going to pay the bill. So my daughter could have applied to some of those schools, but we were not, my wife and I were not going to pony up $250,000 to send her there. So I went looking for other options that would work for her and work for us. She wanted to be she wanted to study art. Her original requirements are she didn't want to go to school in a large city, she didn't want to go more than 2 hours away from home, and she didn't want to go to an art school. She wanted to go to a school that had a good art program, but multiple. She didn't want to just be with art students. So I was having a hard time finding something. So eventually we had to expand the radius a little bit, and she ended up going to Rochester Institute of Technology in Western New York. It's known as an engineering school, but they have an excellent art program. And that's why I mentioned before that it's 2/3 male, because they have engineering, so that's pretty common. But anyway, she got the largest merit scholarship that they offer. I knew she would, because when I was doing the research, I went on the school website and I found out what their criteria were for merit scholarships. So it ended up costing us about what it would have cost to send her to a public college in New Jersey, even though it's a private school. And if you want to look at some parallels, there are some other schools out there that are similar to RIT, perhaps a little more prestigious. One that comes to mind is Carnegie Mellon, another engineering school that happens to have an excellent art program. And at the time, I knew the financial aid director there, so I called her up and I said, do you have any merit aid? She goes, not much. So had she gone to Carnegie Mellon, it would have probably cost us about $100,000 more over 4 years. And I don't, Carnegie Mellon's a wonderful school. I'm not dumping on them at all, but $100,000 is a lot of money. So it didn't make sense for us to look elsewhere. She did very well. She's making a good living as an artist. She does the visual reality stuff, the goggles. Anyway, that's my daughter. My son, 3 years younger, just as smart as his sister, but he didn't do any work in high school. He drove me out of my mind. When it came time for homework, he would, you can go online and see what's going on in the classes, and he would not be doing his homework. So anyway, he ended up with a GPA closer to a 3.0, but he did pretty well in his SATs. So he wanted to go to a Division I school for the atmosphere. And so I went looking for schools that would maybe give him some money based on the SATs. So we did a little field trip. We went to West Virginia University, we went to the University of Louisville, and then we went to Ohio University, and that's where he ended up going to school. And he did get into all three. He did get merit scholarships at all three based on the SAT score only and the 3.0 GPA. It ended up costing us actually less than it would have cost to send him to a public college in New Jersey because the costs in the first place were lower there, and they gave him the scholarship for out-of-state students that bridged the gap. The best part of the story is that he became a student when he got to college. He graduated magna cum laude. So there is hope if your kids are goofing off in high school. If they're smart, they can still pull it together when they get to college. I tell these stories because you can do the same kind of research. You go to the school's websites, find out what they offer. If you don't think you're going to demonstrate need, then you are looking for merit, and you want to see what do they offer, what's the basis for the scholarship offers, and then go about your planning and hopefully help your kids pick out the schools they're going to apply to. All right, so you get all the financial aid offers and you want more money. Can you make an appeal to the school? Yes, absolutely you can. But what is the basis of the appeal? Are you going there to say, we need more money? Well, if that's your argument, then bear in mind that the school already has their own idea of what your need is, right? So the cost of attendance, less the student aid index, less the aid the student's been offered, is there a small gap or a large gap, right? And that could influence whether you get more money based on that. If you go in and you're making your argument based on merit, you want merit scholarship, you need to understand where your kid fits in at that school. Are they going to be a star at that school academically, or are they going to be an average student? And that could influence the school's decision. You're not going to go in to negotiate. It's not like you're buying a used car. And people ask me all the time, should they talk about what they got offered at the other schools? My answer to that is, first of all, make sure you do the math. And remember the story I told about the $10,000 scholarship. The school that you're asking more money for can do the math pretty easily and figure out if you're getting a better deal from them already. The other thing is, your best approach will be to go in and say, look, my kid really wants to come here. Is there anything you can do to help us out, because we're struggling with the decision because we have other schools that are more affordable. Years ago, I worked at a private school for 2 years. My boss was the dean of admissions. So private colleges, with the exception of the Princetons of the world, I keep bringing up Princeton, but most private colleges are tuition dependent. They have to get that freshman class to pay the bills. And so they get very anxious about the deposits as they come in. So my boss at this school was the dean of admissions, so he was monitoring what was going on with the deposits. So how many deposits do you have as of the end of January? How many do you have at the end of February? And based on historical records, you know if you're going to be on target to get your class by May 1st. So we admitted students on April 1st. Everybody got notified at the same time, and then there was an admitted student day on campus, and students would come into the financial aid office and appeal for more aid. So the first year I was there, the deposits were coming in nicely, and so we were pretty stingy with the appeals. My boss made all the decisions on the appeals, but we were pretty stingy. The second year, for whatever reason, the deposits were not coming in the way he wanted them to come in, so he was a little nervous. So that second year, we were very generous with the appeals. So it's the same school, 2 different years, 2 different outcomes. So schools are not going to share with you whether they're struggling to get their class. But in some instances, it may benefit you to wait until later in the cycle to ask for more money. In some cases, maybe not, because it goes both ways. I mean, some schools will continue to offer money based on appeals throughout the cycle, and when they run out of money, they run out of money. So making a late appeal doesn't work so well. But if you're looking at a more selected school, maybe waiting a little bit later might be to your advantage. All right, some other things to think about. Treatment of outside scholarships. So if your kid gets a sizable local scholarship, let's say they get a $5,000 scholarship from the Elks Club, you're thinking, well, this is great. We're going to get the financial aid offer from the school. We're going to decide that they're going to go there. You're going to pay the deposit on May 1st. You're going to get the bill in July. You're thinking they're going to apply the financial aid that they've offered, and then you're going to add on that $5,000. Well, that may not work out that way because, and again, this is more of a private school thing. But there are schools that will, once they find out about the outside scholarship, which they will, because the money comes to them, they may go back in and reduce the aid that they've offered to the student. Now, if it is one of the schools that meets full need, they have to do it, but that's the exception, as I mentioned before. Most colleges leave a gap. So the best case scenario for you is that they would let you add it on to what they already offered, but they may reduce it. So if you're in that situation, my suggestion would be that you check with the school to find out what their policy is on outside scholarships. So they are going to find out, and you probably want to do that before May 1st. Scholarship scams, just if someone wants to charge you a fee to apply for a scholarship, I would just stay clear of it, but I'll leave it there. Consultants, so there are people that go out and they hire people who claim to be experts in financial aid to help them with the financial aid process. My personal opinion is that you don't need to pay someone to help you fill out the forms. They're not that hard to do. The angle that the consultants take sometimes is to, well, they're going to say, we'll make you look poorer than you otherwise would look. And how do they do that? They do it by trying to get you to manipulate your assets. So let me talk a little bit about assets. In the need analysis formulas, the contribution from assets that are in the student's name is much higher than the one if it's in the parent's name. So for example, a student has $10,000 in the bank, they report that on the FAFSA. 20% of that is going to go into that student aid index, 2,000 points. It's going to go into that SAI. If the same $10,000 was in the parent's name, it's going to be maybe 5 or 6%. So the moral of the story is you're better off not having money in the kid's name. And that's what the consultants will focus on. And I don't tell you that so that you're going to run out and move money around, because it may not make a difference. If you have a high income, moving the assets around is not going to make any difference at all. So you need to know the whole picture before you make any decisions to do that. And that's why you can use that EFC calculator on the College Board website and play around with it in terms of who owns the assets. All right, net price calculator. The regulations require all schools to have a net price calculator somewhere on their website. The net price calculator is intended to be a tool that a prospective student can use to put some information in and find out what they might get as a financial aid offer from that school. How useful the information will be depends on the school and the tool that they're using. The regulations require schools to have a net price calculator. They don't require them to have a good one. So if the schools decide to go on the cheap and they use the free one that the feds provide, it's not very robust, and you may or may not get a good readout from something like that. Many schools, mine included, pay an outside company to do this for us. And the reason that we chose the company that we work with is because they have established a link to HESA, the state agency, so that on a real-time basis, when the student goes into the net price calculator, the information gets sent to the state and comes back with an estimated tuition aid grant or tag, which for us is very important. The tag award is typically the highest individual amount of aid the student gets at a school like Montclair. So that was important for us. So just bear in mind that it may or may not be useful for you. All right, back to the CSS profile. Again, it's only schools that require it. So if you're looking at those elite schools, especially, you need to go over their website and make sure you know whether they use the form or not. They also use prior year information. So for the 25-26 version of the profile form, they're looking at 2023 income. Their form was not affected by the federal screw-ups this year. So their form was available on October 1st last year and became available yesterday, October 1st this year. The FAFSA, as I mentioned, last year was really late. This year it's going to be available on December 1st. The CSS profile is a fee-based form, but if the family income is under $100,000, they do not charge a fee. And they have their own websites to go to. The non-custodial parent, I referred to that earlier. If you're looking at schools that require the profile form and the parents are divorced and the student's filing the FAFSA with only one parent and they file a profile form with only one parent, some schools will ask for the other parent to complete a special form that they have. But again, this is only those elite schools. All right, back to the FAFSA. So again, FAFSA this year will be available December 1st. The federal government's saying that it's going to be working this year, knock on wood. We all hope it is, because it was just horrible this year. they're going to calculate that SAI. You file the form online at this website. And I already mentioned the prior year information. All right, contributors. So this was a new term this year. They never used this term before. Every individual that puts information on the FAFSA is considered called a contributor. So the student's always a contributor, it's their form. The parents would be contributors as well. And so if the parents are married and they filed a joint tax return, federal tax return, only one of the parents has to become a contributor and go into the form, because all they're basically doing is authorizing a link to the Internal Revenue Service to pull in the taxes. That last bullet point refers to that process. If the parents are married and they filed married couple filing separately, then they both would have to be contributors in the form, because they have to both go in and authorize the link to their own tax return. And so how it works is that you'll be prompted to give consent that you want to pull in the tax information from the IRS, and you're going to want to do that. It makes the process much simpler. If the student is selected for verification, in that instance, we would not have to get tax returns from the parents. And you will not see the information that's being put into the FAFSA while it's moving in there, and you will not see it afterwards. It's masked for security reasons, so neither you nor the student can see it. We see it in the financial aid office, of course. All right, so who's a parent? So parents are married, living together, those are two parents. If the parents are separated or divorced, but still living in the same single-family home, which does happen, they both have to provide information on the form. If the parents never married, biological parents never married, and they're living in the same home with the student, they both provide information on the form. If the parents are separated or divorced and they live in separate places, a major change this year with the FAFSA was, for all the years I've been in the business, the deal was that the parent who completed the form was the one with whom the student resided, the custodial parent. They changed the rules this year. The instructions now ask the student to report which of the two parents is providing primary support. So the student could be living with one parent and the other parent is paying more than 50% of their costs. So if they're following the rules, they're going to go to that parent who's paying more than 50% of the cost. Honestly, I don't know why they went here, because there's no way anyone's going to be able to verify this, and you're never going to be asked about it. So when people come up and ask me questions afterwards, what should I do? I whisper to them, report the parent with a lesser income. But anyway, that's how that works. Now, if the parents are divorced and they live in two different places, the student lives, let's say the student lives with the mother and the mother remarries, the stepfather's information has to be reported on the form. So if the parent they're choosing to file the FAFSA with has remarried, the other parent has to be included. I think that covers most of the scenarios. Family size. So this is an important element to the need analysis, the SAI calculation, family size. The assumption that the feds are now making is that if the parents file a tax return, that the number of exemptions they took on the tax return is the family size. That may or may not be your reality. You could have somebody in a home that you're supporting, providing more than half support to, that you did not claim as a tax exemption. So they do ask for they do ask the student to self-report household size and also number in college. And you may, if you're in that situation, you may want the student to go to the financial aid office and say, the household size should be X as opposed to what was on the tax return. Number in college, a major change they made this year, which was not to the benefit of students, was that historically, if there was more than one child in college, the way the formula worked is that it would calculate the parent contribution and it would divide it by those number of students in college. They did away with that this year, the feds did. So there's no longer a benefit to families that having more than one in college. On the state side, just so you know, the state does still count multiple children in the household in terms of eligibility for the tuition aid grant. But for federal aid purposes, the SAI, that's no longer the case. So just keep that in mind. We had quintuplets who graduated from Montclair this past year, and I'm just very thankful that they didn't have to go to school this year, because they would have gotten nailed on this. So let's talk about assets for the FAFSA. All right, you report assets on the day you file the FAFSA. What are your assets on that day? Okay. There are some notable assets that are excluded from the FAFSA. One would be any retirement funds you have, 401k, IRA. Those funds are not reported on the FAFSA. And if you own a home and you live in that home, the principal residence, any equity you have in that property would not be reported on the FAFSA. Everything else pretty much counts. Money you have in the bank, savings accounts, stocks and bonds that are not part of your retirement, other properties you might own, like a vacation home or a rental property, the equity in those properties would be reported. And also another change they made this year, which was really to the detriment of families, was that they used to have an exclusion for people that own small businesses. So if they owned a family-owned business with fewer than 100 employees, they were not required to report business assets. They did away with that exclusion now. So if you own a business, regardless of the size of the business, you're required to report business assets on the form. And again, it's what you have on the day you file the FAFSA. So I always use this example. If you had $50,000 in cash the day before you file the FAFSA, and you buy a new car, which doesn't show up on the FAFSA, or you pay down your mortgage, the asset disappears. It does not show up on the FAFSA. But if you do it the day after, you can't go back in and change it. So whatever you report on the day that you file the FAFSA, pretty much you're locked into that. So just to kind of recap then how the form works, the assets are reported as of the day you file the form. The income is a 2-year look back. And the household size, I should have mentioned that earlier, is a projection of the household size in the academic year to come. So it's going to be from July for your parents of seniors, July 1st, 25 through June 30th, 26. How many people are going to be in the household? And you can include anyone in the household that you, the parent, are providing at least half support for. So it could be a grandparent, it could be other relatives living in the home. If you're providing more than half of their support, it's legitimate for them to be counted as in the household. All right, so I talked before about the federal tax ID, tax information, contributors. Okay, so before you file the FAFSA, both the student and whoever's going to be a contributor among the parents, one or both parents, you have to obtain what's called the FSA ID, Federal Student Aid ID. And basically, this is a login, a username and a password that the student and the parent will use to access the form and to electronically sign it. And if they take out student loans, they'll be signing their promissory notes using that same ID. So you have to go to this separate website. You can do this now. You don't have to wait for December 1st to do this. And again, the parent has their own FSA ID, and the student has their own FSA ID, and it's yours forever. So don't forget what it is. So in the future years, when you file the FAFSA for the same student, the parent will continue to use the same ID, the student will use the same ID. If the parent has multiple children and they're filing multiple FAFSAs in the future, they would use the same ID. This past year was a disaster in many ways for the FAFSA, but especially for students whose parents are undocumented and didn't have Social Security numbers. Supposedly they have fixed this problem, and we will see if that is the case. And again, back to the federal tax information, you're pulling in the information from the IRS. You have to consent to have that done, and you won't be able to see the numbers as they come through. And this is what consent looks like. So the key elements of the FAFSA, the student has to have a valid Social Security number. The student must be planning to enroll at an eligible institution for federal aid, in eligible programs for federal aid. The student for federal aid purposes must be a U.S. citizen or a permanent or an eligible non-citizen. And again, the New Jersey Dreamers are only eligible for New Jersey aid, they're not eligible for federal aid. And these are some of the components of the FAFSA. I'm not going to read them, but what's really important is that when you're completing the form, you take your time and make sure you get some of the simple things right. Make sure you put in the correct Social Security number. Make sure you put in the correct date of birth. Make sure you know if you're in the student section or the parent section, so you don't put the information in the wrong place. Make sure that the name, as you put the name into the document, that and this goes for the FSA ID process as well, your name has to match exactly what's on file with the Social Security Administration. So if you're not sure what the name is on file with them, go to the closet and pull out your old Social Security card and look at it. Make sure that they match, because basically what they do is they do a database match with Social Security Administration and Homeland Security, because they're trying to verify that you are who you say you are. After the form is filed, both contributors will receive a FAFSA submission summary, basically confirming that the form is filed. One of the improvements they're promising for the coming year is that when the student files, when the form is submitted to the federal government, the student will be informed that it has been submitted. They'll also be told if there are any problems with it, so they'll know that they need to go make some corrections. This past year, that was not the case, and it was very confusing for a lot of people. All right, back to verification. So I mentioned federal verification. So the students selected for federal verification, the school's going to reach out to them, financial aid office, request documents. The student may also be selected for state verification, HESA, for state aid programs. So the student could be selected for federal verification or state verification, or both. If it's state verification, the student will be reporting information to the state directly, not to the school. And there's a portal called NJ-FAMS for the state, so after the student files the FAFSA, if they're looking at New Jersey schools at all, they should go into this website and create a login so they can access the student portal. They'll be able to see the status of their aid with the state. They'll be able to see if the state is requiring any documents from them. They use the portal to upload documents. And I mentioned emails before. If they did miss the emails, all the emails are retained from the state. It will be on that website, so they can go back and read emails that they didn't read. And I already talked about the Dreamers. Again, this is the NJ-FAMS student portal. There's a lot of information on NJ-FAMS. So, like for example, once the student lists multiple New Jersey schools on their FAFSA. By the way, you can list up to 20 schools on the FAFSA now. They changed it, it was always 10, so they moved it to 20. I hope none of you are looking at more than 20 schools. If you are, then what has to happen is you put 20 on the initial FAFSA, and then after it's processed, you have to go back in and swap some out in order to get the additional schools the information that they need. But anyway, getting back to NJ-FAMS, if the student has listed multiple New Jersey schools, at some point they'll be able to go in, and the student will be able to go in and see what their tag award would be at those different institutions. The amounts vary depending on the school. So the cycle, in a normal year, the cycle is that the FAFSA becomes available October 1st, so hopefully for your kid's second year in school, it will be. This year it's December 1st. So you'll start getting financial aid offers from schools. The slide says in February to May, but it may be sooner than that. Some schools may start getting offers out in December or January. But ultimately, you want to have all the offers from the schools in hand to make a decision, financially anyway, before May 1st. And you make the decision on May 1st, you put down the deposit, and then in the summertime, the student registers to classes, they go to orientation. In late July, you probably get a bill, and then it becomes real. All right, so where do you go from here? Do the research. I said earlier, you really, once you drill down the number of schools you're looking at, you should be spending a lot of time looking at those schools and finding out what the requirements are. All right, so the state of New Jersey passed a bill a couple of years back that requires all schools in the state to use this exact form as their financial aid offer. It's called a college financing plan or a shopping sheet. But basically, it displays all the costs and the aid in a succinct fashion. It makes it easier for you to understand what's being offered to you. Because honestly, historically, schools had their own financial aid. We used to call them financial aid award letters. And formatting was all over the map, and sometimes they were a little bit deceptive, if I might say that. So this eliminates this, but this is only New Jersey schools. So if you're applying to schools outside of New Jersey, not going to look like this. It's going to be the traditional financial aid offer. So you still have to scrutinize it and make sure you understand what's being offered, as I mentioned earlier. Other resources, outside scholarships, you should certainly pursue that. Payment plans I talked about. Campus employment, I highly recommend students work on campus, not just because they make money, but because, in my experience, it really helps them to progress. You know, they form an attachment in the office they work in, with the people they work with. So if they have a problem on campus, maybe they can find out who should I talk to about that kind of thing. It's a good idea. There's some specialized forms of campus employment. One is the resident advisor, RAs. This would not be for freshmen, but for upperclassmen. But students are basically hired by the school to be responsible for one of the floors in the residence hall or dormitories. And the deal there typically is that they get a free room and they get a stipend. So it's a pretty good deal. So that would be mostly for students, like juniors and senior level students. If you're going to colleges and taking tours around campus, you're going to be taken around probably by a student and get paid to do that. And last, at the bottom there, cooperative education, if you've ever heard that wording, that phrase before, this is a school that offers programs where students alternate periods of enrollment with relevant employment. So let's say it's an engineering student, they would go to school in the fall, they'd go to work for an engineering firm in the spring, and they kind of rotate back and forth. There are multiple benefits to programs like that. I mean, students make money while they're in school, which is helpful, but they also get, as I said, relevant experience with a company that maybe will offer them a job when they graduate. So there are some schools that have very robust co-op programs, and you have to go out there and find who they are. Other resources for scholarships. The school has some scholarships I'm sure you'll hear about in the spring. Libraries, local businesses, parents, employers. The one website I want to reference here in particular is fastweb.com. That is one of many websites that are available for free. Free is the operative word here. They're free. And students go to websites like this and they look for scholarships. And so the last student to report information about themselves, their ethnicity, their race, their major that they're planning to go into, their father's union, whatever it might be. They'll ask a whole bunch of questions about the student, and then it'll search for scholarships that match up well with that student, and then the student can submit an application. So this is the time of year, if your kids are seniors, this is the time of year that if you're interested in pursuing this, that they should start looking at this, because it may take some time to put it together, the application, and you need to get a reference or whatever, because if you wait until after the holidays, it's going to probably be too late. But over the years, I've seen some students be extremely successful looking for outside scholarships through these types of websites. NJ Best is a 529 plan sponsored by HESA, the state agency. This is the college savings plan, which you may be familiar with. Every state in the country has a 529 plan. This is New Jersey's version, which is actually, I think, a pretty good one. They've enhanced it in recent years, including the scholarships they offer. So while we're on the topic of 529 plans, let me explain how they work with the FAFSA. So a 529 plan is a parental asset, not a student asset. Okay. One of the changes they made for this year, which was actually a positive thing for families, is that in the past, the way things worked is, let's say the parents had several children and they had a 529 plan with each of them. The old rules were that they had to add all of those 529 plans together and report them as a parental asset on the FAFSA. The rule now is that you only report the 529 plan that is in the name of the student that you're filing the FAFSA with. So it allows you to ignore what you might have saved for your younger children. If a 529 plan was established by someone other than a parent, like a grandparent, it doesn't get reported on the FAFSA at all. The catch with that is that when that money becomes available, is made available to the student, whatever calendar year that occurs, for FAFSA purposes, that's considered to be untaxed income. So, given that there's a 2-year look back, I sometimes suggest to parents that if you're going to get money from the grandparents, then you might want to wait until like they're juniors, because the 2-year look back you can avoid being penalized for it. All right, so the state, HESA, has a lot of a lot of great information on their website. They have videos I don't know if it's out there yet, I haven't looked, but they'll have videos to help you complete the FAFSA. They have a bunch of flyers that you can print out on different topics, like the FSA ID process I talked about earlier. There's one devoted to that, but there's a wealth of information on their website. It's all free, of course. And they have their own customer care, and they have websites for the different programs that they have. And that's the end of the meeting. So I'd be happy to take any general questions now. And as I mentioned earlier, if anyone, well, maybe I didn't mention it, but if anyone has an individual question you want to ask me privately, I'll stick around and be happy to answer those questions. Yes?
You asked something, you mentioned something earlier, I was trying to figure this out. On one of the slides you said you wanted to go to that $80,000 trade school and you could take a loan out for all of it.
Right.
Can you keep a little more, this is kind of boring, so I'm trying to figure out, like you said, you do all the numbers and you end up with this crazy number that scares them.
Right.
Can that entire number, can you get a loan for that number, right? Interest rates, whether it's good or not, can you do that?
If you qualify for the Federal Plus loan, for example, yes, the answer is absolutely yes. You can borrow whatever the amount is, you can borrow. And for most of the private lenders, so the question, if you didn't hear it, was, are there any limitations on how much you can borrow if you're borrowing one of the private loan programs? And there isn't really. You can borrow up to the full cost of attendance, whatever it might be, less the aid the student is receiving. But to your point, you want to be conscious of that. I'm 70 years old and we're still paying loans for our kids' college education. So you may not want to be doing that when you're 70. So, it's a tough decision to make. Yes?
I think that just follow up to your question. If you're going to apply for a loan, year one, you know what that first year is going to cost. When you apply for that loan, how do you know what to apply for if you're planning to start in 4 years? Because you don't know each year.
Or you apply for the loans each year. You don't apply for a 4-year loan.
So you could apply for the loan the first year.
You have to.
And
Yeah.
then the second year, get denied.
You could be, yeah. So the question is, if you are taking one of these private loans, you could get approved the first year and denied. It's possible. If something happens to your credit, it is possible. I should have mentioned earlier, the Federal Plus loan, from an underwriting standpoint, is the easiest loan to qualify for. So if you're concerned about qualifying from a credit standpoint, that's going to be your best bet. And for the private lenders, if you've got some glitches in your credit, you could be offered a loan, but it could be a pretty high interest rate. Yes?
So when it comes to, clearly I've been through this before, but there's been a lot of changes with my upcoming students since my boys have gone through it. But so we used to file married jointly, so we only had the student profile and login, and we had one parent student profile and login. One of us was the primary, the other was the secondary. If you're now filing married but separate, right?
You mean filed your taxes married separate?
Yeah.
Yeah.
Both have to attest to
Yeah.
be able to pull. Do you have to create a second login?
Yeah. Both parents would have to get an FSA ID.
You would have to do a
So if the
separate
parents are
entry.
married and they file the federal tax return separately, married but filing separately, they both have to get an FSA ID and they both have to go into the form as contributors.
So would I have to correct the first form? Because our current one has one of us listed as primary and then the other one is secondary.
I'm not sure what you mean by that, but.
Yeah, I just logged in before I came actually.
You're talking about the form for the current year?
For FOSFA.
You've got one in college
So
already?
just be reminded, the last time I had to do this was 2021 or 22, so a lot has changed since then.
A lot has changed.
Yeah.
Yes. Yeah, I mean, I don't know what you mean by primary and secondary. Come up and speak to me later if you
Okay.
want, and we'll try to sort it out. Anyone else? Yes.
So at least 3 times you mentioned, okay, so in your cases, you didn't qualify for need-based. So when you were talking about like an athletic scholarship, you said you'd have to go to the website and see if it's there. Then when you were talking about your son, you said you can go to the website and see what they offer. He didn't have a great GPA, but he had a good SAT, so you said, I went to the websites and I looked what they were offering merit based on. And then on another part, you said, if they give you merit money and the student applies for some more scholarships, go to the website and see if they're gonna take that off, right? So a couple times you said, go to the website. So how hard, like, it sounds like, does each college have a website, and if this is the name of that tab, and if you go there, you're gonna get all this information,
So,
or is it like a search?
Every school has a different formatting, with their websites,
Yeah.
and not every school will provide definitive information about merit, like I found years ago with my kids. I went down there, and it basically was a grid for both kids. It was a grid that had the minimum GPA was 3.0, which thankfully he had. And then you had to have, in his case, it was only 1,100 SATs. So, but not every school will provide that level of detail about how they offer their merit aid. So you won't necessarily know, but you have some sense, I think, of how difficult, how easy or difficult it will be to get a merit scholarship at a school is. The more selective the school, the more difficult it will be, clearly. Because there are selective schools that offer merit scholarships. All I can say is that you've got your list of schools you're looking at, and just see what's there. See what's there.
So there's not like one generalized tab, like all of these, like these
No, I
three
mean,
things that you
they
mentioned
could
can
have
be found on this tab.
the formatting will be different for every school's website. It'll be different. So you can go, if you're looking for merit scholarships, they have a search box on the web. Type that in, see if it brings it up to you, or else look at admissions. A lot of times the merit scholarships are in the admissions pages on the website, or the financial aid pages.
And
But
that would be
you
and that would be the same, because, I mean, from what I understand, applying for some of these scholarships it's a lot of work. You said yourself, the student should be doing it now, and so there's essays or
Well,
whatever.
the outside scholarships, yes,
Right.
that's different than the school scholarships.
Right, but you said go to your schools that you're interested in and see if they're gonna deduct that from what they're offering you.
If you get a private scholarship, the Elks
Yeah.
Club I mentioned, yes, but not the school loan.
But all of this is not found in one particular.
There's
page.
not
Sounds
like a
it's
single
like
place
you're
to
gonna
go
have
to get all the information you're
Sounds like you
looking
have to
for.
be a detective to figure this out,
You do.
which sounds very time.
I mean, honestly, most of the more selective colleges are unlikely to have much in the way of merit. That's just a fact. But there's a second tier of schools that are really good schools that do offer merit, but you won't know that unless you look at their websites. Yeah.
You mentioned the 529, the UPMAs and UPMAs work the same way?
I'm sorry, say it again?
Do the UPMAs work the same way? You mentioned the 529.
Oh, the uniform gift to minors. So any of those programs, if the money is in the student's name, it's the student's money. So that's all I can tell you there. There's instructions on the FAFSA about what to include and not to include, but when you set up savings accounts for the kids and it's in the kid's name, it's the kid's money. Yes?
Does the student have to provide their tax ID information for the?
If the student filed a federal tax return in 2023, then they would provide that information as well and do the link to the Internal Revenue Service.
And that adds on to the parent's income?
No, it's
No?
the formula looks at the incomes differently. The student's income is less impactful than the parents, but typically students in high school especially don't make a lot of money, so it doesn't have a huge impact. All right, then I guess we'll close. I hope this was helpful, and again, I'll stick around if any of you have individual questions.
Excuse me.
Yes?